You know what we do every Wednesday. We sit down and talk about money because some people say you should never talk about money, but we say let's do it on live TV, right?
I think it's a great idea.
I know. You've made a career out of talking about money. Chase is here today with us from Wilsey Asset Management, and today we're going to talk about private credit. And you said more and more regulators are getting concerned about this. So let's define private credit and then say why there's this concern.
Yeah, so when we're looking at private credit, what it really is it's these large asset managers essentially that are doing loans. So, you know, we're familiar with you go to a bank, you take out a mortgage. I mean, that's a pretty simplistic example. But the private credit, oftentimes, they're doing these loans to businesses at much higher rates. And what I'm looking at is the investment side of the equation, right? So a lot of retail investors really didn't invest in the space before, but because of high projected returns, high interest rates, they became interested in it. Well, now there's been problems, and we've seen the SEC and the Treasury Department actually step in and ask for more information and actually launch some investigations.
Well, that leads me right into the next question is what kind of supervision is there when it comes to these private loans? Obviously, we know banks are regulated, but when you get a private credit, what kind of strict supervision is there, if any?
Yeah, so that's a big problem in my mind, right? If you buy a stock, well, you know that that's going to be governed essentially by the SEC. They have all these requirements, all these disclosures they have to provide, where with private credit, there's a lot less regulation. There's a lot less scrutiny around it. And the big problem is they're illiquid investments. So you can do what we call quarterly redemptions oftentimes, but they only have to redeem about 5% of the shares outstanding. So what could happen, and what we saw in the first quarter, was there's $20 billion worth of redemptions, but only about 11 billion was redeemed because so many people rushed for the exit. And I think this is only going to get worse because now people are like, well, I wanted to get out and I couldn't. I think now they're going to be back in Q2 and you can see higher redemption requests.
What does that mean for the everyday person? Is this something that trickles down to the consumer at some point, or is it something we just need to be aware of and follow in the news? How is this impacting all of us?
I think it's an important topic to address because, you know, you've seen this concern, is it systemic? Now, systemic means, is that going to impact the broader financial system? And we just had Jamie Dimon, the CEO of JP Chase, talk about this, and I really trust his guidance. He sees a lot of money and a lot of different accounts there, and he said he doesn't believe it's systemic. A big reason for it, it's only about a $1.8 trillion market. Now that sounds pretty good.
Yeah, I'm
right?
like, what? There's a T. When I looked at my notes, I was like, that is a T, not a B after.
But a lot of that's institutional money, number one. Number two, if you look at mortgages on the other side, mortgages are about $13 trillion. So when we had the debacle in 2007 that caused 2008, 2009, the mortgage market is such a large market that caused so many problems where, yes, this is going to be an issue, I believe, for people that invested in it, but I don't think, as Jamie Dimon said, I don't think it's going to be what we call systemic.
Okay, and what does this mean for someone like you? I mean, so many people come to you and seek your guidance. You guys are so great about putting out newsletters and sharing all this information. Why is it so important to you to address this and let our viewers know what's going on?
I think it's so important because so many people get sucked into the hype. They hear all the positives of investing in private credit without hearing the negatives of the illiquidity, maybe the lack of scrutiny. So we don't do anything in the private credit space. I don't like illiquid investments. I want good, sound, safe businesses, good, safe, sound investments that I can exit if I need to exit. So in my space, I don't like to recommend these products. And if it is being recommended to you, understand the potential pitfalls as well.
You know, and to bring it back to the SEC investigations that you said more and more are starting, is there like a length of time these generally take? Is it something that goes on for years and we're going to be talking about this next year again? Any idea what that looks like for an investigation?
You know, it really depends. And, you know, there's not a lot of information yet on what those investigations really detail. I mean, what are they going after? How many requests did they have? And I think oftentimes, unfortunately, the government, things can be a while before we get answers.
You don't say. Our government moves slow sometimes. Oh my goodness. I love that we carve out this time because I think it's getting a lot of our viewers really interested in investing. I know when we first started this segment months and months ago, I was like, I don't know anything. What kind of questions am I going to ask? What do you guys enjoy about just educating people? And do you guys get some feedback about what people have learned?
Well, I think it's such an interesting space, right? I mean, as you said, nobody really wants to talk about money, but it is important to understand money and understand how it impacts your life. So that's why we want to pull out these different things to make sure you have a general understanding. You're not going to be an accountant, you're not going to know the financial statements, but the things to watch out for potentially when you're talking to an advisor, when you're talking to a salesperson potentially that's trying to sell you a product, that's why we really want to do these segments, is to educate the broader industry, educate the broader investor.
Awesome, Chase, thank you so much, and thank all of you for joining us. And as we head out, we want to thank our sponsors. Have a wonderful day.